markets in India have had their worst performance in over 2 years this past week. Both the Nifty 50 and Sensex plunged more than 4%, marking their steepest decline since June 2022. But what is behind these numbers? The Nifty 50 fell by 4.5% and the Sensex saw a similar decline. Key stocks such as Hero MotoCorp, Shriram Finance and Axis Bank led the market lower. This steep fall was fueled by geopolitical tensions and economic data from the US. The major driver? Yes, ongoing conflict between Israel and Palestine, which has shaken the market confidence globally. Adding to this, Iran's supreme leader issued a warning about a potential strike on Israel. Not just this, US President Joe Biden's comments on Iran's oil reserves caused a surge in oil prices. Brent crude went up nearly 10% this week alone, worsening the global market sentiments even more. In the US, important data releases added to market volatility. The US services PMI jumped to 54.9 in September, surpassing expectations, while the private payrolls saw a rise of 143,000 jobs, also beating estimates. Here in India, our manufacturing PMI for September dropped slightly to 56.5 from 57.5 in August, showing a minor slowdown in activity. Meanwhile, the 8 core industries index saw its first decline in 42 months, contracting by 1.8% in August, led by weakness in coal, crude oil and natural gas production. Back home, heavyweights like HDFC Bank, Reliance Industries, ICICI Bank and Mahindra & Mahindra saw a notable decline. However, IT majors like Infosys, Tata Consultancy Services and ONGC provided some relief, cushioning the overall fall. Sector-wise, out of 20 sectors on the BSE, 19 ended in the red. The FMCG sector was the worst performer, while the IT sector emerged as the only gainer, proving once again the resilience of technology stocks. Another major factor contributing to the market slump was the withdrawal of foreign institutional investors. They pulled out 30,484 crore rupees from Indian stocks this week, shifting their focus towards Chinese markets, which is currently offering cheaper valuations and are benefiting from government stimulus measures. As we look ahead, all eyes are on the key data points coming from the US, including the Consumer Price Index and the Producer Price Index for September. The Federal Reserve's future policy will also play a role, with investors worldwide awaiting its guidance. On the domestic front, the Reserve Bank of India has its monetary policy meeting on October 9th, which will be crucial in determining the trajectory for interest rates and inflation management. As the global uncertainty continues to impact Indian markets, investors should remain cautious, focusing on quality stocks in the safer sectors.